Hey brothers, how is that possible, you ask, and it is real to do all this with considerable effort. I'm not going to tell you that you can make gold out of air. That would be too naive and disrespectful to you, but as respect for me, I ask you to subscribe to the channel. So you help me in my development, and now let's go. Ripple's XRP war is heating up, legal expert insight. In a significant legal development, Ripple achieved a crucial, albeit partial, victory against the U.S. Securities and Exchange Commission SEC last month. Notably, in a recent ruling, a U.S. judge declared that the blockchain firm did not breach securities laws by selling its XRP token on public exchanges. This decision has been met with enthusiasm from XRP investors, leading to an impressive 35% surge in the token's value over the past month. However, although Ripple won a short-term battle against the top securities regulator, the far-reaching impact of the lawsuit may not be as positive for the crypto space. According to fresh legal insights shared with Finbold regarding the case on August 4th, outdated Howey test making crypto landscape unclear with the growing uncertainty about the final outcome of the SEC Ripple lawsuit. Finbold sought professional views on the case from prominent Web3 attorney Charles Slamowitz. According to the legal expert, after crypto enthusiasts eagerly celebrated Ripple's recent triumph, the blockchain space may be back in muddy regulatory waters as the hunt for clarity marches on. Slamowitz cited the so-called Howey test as one particular factor that could negatively affect the ongoing Ripple case, but also the broader regulatory landscape in the U.S. And here I attach a quote from the author. However, Slamowitz believes the test is outdated. Despite this, it has become increasingly entrenched as the regulatory standard in the U.S. As a result, the growing use of this obsolete criterion can only make the unclear crypto landscape even more murkier, the expert argued. Not only did the outdated Howey test become more entrenched as the regulatory standard, but the use of such a standard makes for a far murkier crypto landscape. Slamowitz told Finbold, "What is the Howey test? The Howey test is a legal criterion used in the United States to determine whether a transaction qualifies as an investment contract and, therefore, as a financial security. The U.S. Supreme Court adopted the Howey test in 1946 in an effort to create a uniform analysis for lower courts and litigants to use when determining if an investment qualified as a security." Looking ahead, Slamowitz also believes that institutional investors will have to potentially sidestep securities regulations in order to carry out simple agreements for future tokens SAFT with crypto-related startups. SAFT refers to a financial contract often used in the cryptocurrency industry to raise funds for blockchain projects. It allows investors to purchase the right to receive tokens once they are developed and launched. And this is one that you, my dear friends, will really enjoy. SEC is truly broken. Leadership sold out, says crypto lawyer. Pro-XRP advocate John Deaton believes that the SEC is truly broken. My God, the leadership has sold out, said the crypto lawyer in his latest Twitter post. Deaton's comments were in response to Coinbase CLO Paul Gruel's views on SEC Chairman Gary Gensler's entry into the AI space. Pro-XRP lawyer John Deaton shared his thoughts on Twitter earlier today, stating that the SEC was truly broken. Deaton was reacting to Coinbase Chief Legal Officer Paul Gruel's latest statement about Gary Gensler's venture into the AI space and how the SEC chairman was avoiding talking about crypto. Wow. The SEC is truly broken. I know there are good, hard-working people that make up the staff, including career SEC lawyers, but my God, the leadership has sold out. That's how outcast our SEC employees are. I personally see the outcome of the whole situation. Who do you think is going to win? Let me know in the comments. After claiming that the SEC was broken, Deaton affirmed that there were good, hard-working people that made up the staff at the regulatory organization, including career sec lawyers. But he believes that the leadership has given up on their beliefs and principles. My God, the leadership has sold out, said the lawyer in his post. Both Deaton and Gruel believe that Gensler is now trying to hide from the shame of the XRP verdict. Their followers also find it amusing that the regulatory leader, once vehement in its plans to take down crypto, is now avoiding the topic entirely. As Gigi takes a big loss in court, Ray Crypto suddenly doesn't want to talk about it anymore. Probably unrelated, joked one user in response to Gruel's post. In the Bloomberg article shared by Gruel, Gensler stated that he looks at AI as the most transformative technology of this generation, and considering that mass automation could have implications for assets in trade, which the SEC oversees, Gary's interest in the field is understandable. Interestingly, Gary has a long history with AI. He has even written a paper with a student at Met on deep learning and financial stability. Regarding Gensler's foray into the AI space, there is speculation from the crypto community that the SEC chairman was looking for yet another technology he could try to control. What makes Gary think he has jurisdiction over AI technology? Is AI security too? Asked one crypto enthusiast. Cryptocurrency bull run XRP could see monumental 430.6% increase. Expert predicts, of course, such an explosion is the dream of any owner of shares in the company of this cryptocurrency. How is it possible? Let's listen to an expert. A respected crypto analyst, CoinKid predicts a massive 430.6% price surge for XRP, potentially reaching $3.74, based on ascending triangle and double bottom patterns. This bold forecast comes amidst a recent ruling that could prevent XRP from being classified as a security, which could support its future price growth. In a noteworthy development within the cryptocurrency landscape, respected analyst CoinKid has projected a striking rally in the price of XRP. Ripple's native token and analysis of the token's half-year trajectory indicates an impending 436% surge, potentially pushing the price to a substantial $3.74. Interpreting the signs, the ascending triangle. For those unfamiliar, an ascending triangle pattern is a highly regarded tool used by technical analysts to predict possible price actions. The pattern is visualized as a triangle with a flat upper boundary, denoting the high points of the price, and a bottom boundary sloping upwards to connect the price's lows. This geometry tends to suggest an imminent price breakout, either upwards or downwards. Typically, ascending triangles are interpreted as continuation patterns, indicating a likely persistence in the trend that led up to the triangle's formation. CoinKid has interpreted this pattern in XRP's chart as a bullish omen. The bullish sentiment for XRP is further underscored by a recent court ruling. A federal judge has postulated that XRP may not fall under the classification of a security, a development that might significantly enhance XRP's upward mobility. Adding another feather in XRP's bullish cap, CoinKid also identified a possible double bottom on the 6-month chart. This pattern often indicates a bullish reversal, suggesting XRP may have located a strong support, paving the path for a possible uptrend. According to CoinKid's forecast, XRP's initial surge may reach $0.827. However, a more considerable upswing could materialize by 2025, with XRP potentially reaching $3.74. Nevertheless, the XRP community has expressed varied responses to this prediction. Recent market trends reveal a growing preference amongst institutional investors for altcoins like XRP, Cardano ADA, and Solana SOL. These altcoins have attracted substantial inflows, while Ethereum-focused funds have seen outflows. However, as all prudent observers and participants in the notoriously volatile cryptocurrency market would concur, such predictions should be treated with caution. A myriad of unpredictable factors can significantly sway price movements. As such, a thorough analysis is vital before making any investment decisions. Despite promising predictions, the ever-present element of uncertainty demands a judicious and well-informed approach. This week in crypto, Curve loses $50 million, XRP soars, and SEC sues Pulsicane. Well, how about that? That's really cool news. Let's hear it. The SEC sues Richard Heart, the founder of Hex, for allegedly spending $1 billion earned through staking products. A bug in the compiler for the Viper programming language leads to an exploit of DeFi Pillar Curve Finance following a favorable XRP ruling. Institutions are testing the potential of XRP Ledger in critical banking functions. PROMO Ethereum's user decline, Uniswap's gas fee reduction, and Trader Curve's rise. What's next? Crypto news. We bring you a roundup of what's been happening in crypto this week. The U.S. Securities and Exchange Commission SEC sued Pulsicane founder Richard Heart in a lawsuit the industry had long expected was coming. Meanwhile, the world of decentralized finance DeFi was all shook up by exploits stealing over $50 million from exchanges. At the same time, Ripple's XRP ledger achieved a strong uptake after a favorable legal ruling in July. Other stories making headlines include the downgrading of U.S. credit to AA+ by ratings agency Fitch and rumors of the U.S. fraud charges against Binance. Curve Finance exploit starts gloomy week for DeFi, the $50 million plus exploit of DeFi Pillar Curve Finance on Sunday shook the confidence of investors who regarded the exchange as one of the most secure in the industry. The exploiter milked a bug in the compiler for the Viper programming language to steal what's believed to be up to $70 million from various Curve liquidity pools. Crypto risk firm Gauntlet estimated the hacker stole the funds in CRV and another ETH-based token. While not big by DeFi standards, the hack nevertheless sapped the confidence of users depending on the protocol for lending and other activities. It also capped off a grim month for DeFi exploits, which ended Q1 75% lower than a year ago. Ripple ruling boosts XRP ledger. Business judge Annalisa Torres' Ripple ruling is making waves across the world, as newfound confidence in the company's ledger technology is seeing several institutions advance digital currency efforts. Entities, including Hong Kong's Fuban Bank, Palau's Ministry of Finance, and Seoul's Catalyze Research, leverage the XRP ledger to streamline financial functions, including loan issuance, stablecoin transfers, and also to boost appetite for XRP trading. Last month, Torres ruled that XRP sales to investors through exchanges did not fulfill all the criteria of an investment contract in U.S. securities law. Despite recent disagreements on the ruling, the crypto industry hopes its legitimizing crypto will catalyze adoption. SEC sues Pulsicane founder Richard Heart for securities fraud. Monday's SEC lawsuit against Hex founder Richard Heart awakened DeFi users to the sobering truth about crypto securities. Despite the recent XRP ruling, the SEC sued Richard Heart for allegedly earning $1 billion through staking products. The SEC argues satisfies all prongs of the Howey test and is therefore subject to regulation. Heart has yet to respond publicly to the charges, including securities fraud for abusing investor funds. Last month, the SEC reopened comments on a proposal to amend the definition of exchanges under U.S. securities rules. It affirmed it would crack down on certain DeFi protocols while the new definition is finalized. And that's the end of it. See you guys soon.